And good afternoon. Welcome into Market Talk for this Wednesday, March 23rd. Thanks for joining us, making us part of your day once again. I am your host, Jesse Allen, and thanks for being here. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com is where you could find us. All of our Facebook, Twitter, Instagram links are there, the latest streaming sources, and much more. Latest news of agriculture, too. It's all online. MarketTalkAg.com. Well, we saw a little bit of deja vu today, a little profit taking in the wheat market. Soybeans, the soy complex strong again. Corn kind of caught in the middle of the range here. We have plenty to discuss. Let's bring in our good friend Mike Zuzolo with Global Commodity Analytics joining us on this Wednesday. And Mike, good afternoon to you, sir. And another interesting day throughout the world of agriculture and throughout these markets today.
Yeah, you've noticed since we talked last week, Jesse, that we're getting a little bit more of a sideways to higher bias. We're making some new contract highs in December corn. I think there's a variety of reasons for that, and we can go into more detail here in a second. But we're also seeing the wheat maybe pull back a little bit more, thinking that we've maybe priced in enough upside in terms of price, in terms of rationing demand, until, quite frankly, we know more about the wheat crop, especially given that we had some rains in the hard red wheat belt, not enough, and obviously not nearly as good a coverage as the models were depicting. And if the models are anywhere close to being correct the next 10 days, we're still going to be short. So but I think these are the kind of things that we are starting to see a little bit more of a profit-taking mindset, as you say, in the wheat market, whereas the row crops really not looking back much, especially in the soybeans. Once again, we've got, after that 3-week low in the crude oil market, the crude oil is only about $15 from its major high put in about 3 weeks ago. And we've got this vegetable oil market that just continues to see the bull get fed, especially when it comes to Ukraine and when it comes to Asia.
Well, let's dive into some of these topics. Let's start with this wheat market first and look at the spread here with the wheat corn spread. And I know you and I have talked about wheat being the leader here and now kind of just seeing some of this profit taking. I mean, what are you seeing in this wheat market and how it compares to corn here with the spread?
You know, last week at this time, we were talking about Ukraine maybe not getting 40% of their spring crops planted. Now it's up to 55%. And some of the ag ministry people and also APK Inform, a consultancy over there, are saying that corn is really going to suffer in terms of acreage and acreage base, because they're just quite honestly going to have to go after food grains in order to keep from starving and having a severe famine. So along with the diesel, along with the fertilizer, is just the practicality of why grow a feed grain when you need to eat. And so I think this wheat corn spread is something that, for subscribers and clients, I'm really going to be keeping a close eye on. And I say that because if you look at the green line, not so much the purple and yellow line, but that green line is the wheat on soft red minus the corn. You noticed back in 2012, the premium in the soft red wheat wasn't nearly as great as it was back in 2007, 2008. And so when I look at those two different years, when it looks between the soft red spread and the corn spread and who's getting the premium, it's much more clearly defined that the wheat market is the leader here. It is getting the premium. And back in 2007, 2008, it actually led the corn market higher. And when the wheat market was done, the corn market was done as well back in that 07, 08 time period. And so, we're looking more like that right now. But as we go into springtime, because we're talking about Ukraine and because we're talking about Russia, if we see a situation where the tight global supplies of corn get even tighter because they only plant maybe 3 or 4 million hectares of corn this year versus 7 or 8 normally, maybe we start to transition towards more of a 2012 type market where the corn actually takes over as the leader. This would especially be pertinent, I think, if we had a drought here in the United States.
Very true. Well, and we have the acreage battle going on right now, Mike. Excuse me. And it's really something to watch here. Wheat acres, spring wheat acres, corn, beans, we're all fighting for it. And, you talk about wheat being the leader to the upside and everything going on globally. it just feels like the next couple of weeks are setting up to be very, very interesting.
You bring up a huge point. These next couple of weeks are really key because of the acreage and stocks report. And I think, looking at this zoomed in area of 2007, 2008, you can see way back in early 2007, which I would equate to 2021 in terms of a parallel or similar year as to what we're dealing with right now. The wheat by far started moving higher, and the corn just kind of gradually moved higher. And then we had the big kind of blow off top for 3 months, essentially in March of 2008. So that's one right there, is really to your point, Jesse. If we have an acreage and stocks report that suggests that we have more supply than maybe we thought we had, or we see big corn acres come in, and we see smaller soybean acres, then that probably allows us to be continuing to track with that 2008 market. So it would suggest then that the wheat would put the high in first, and the corn maybe would come back and put a higher high in like it did back in 2008, June, July time period, but not by a lot. We essentially went from 550 up to 650, maybe $7. And yeah, that $1.50 was pretty decent, but it wasn't anything close to what we saw in the wheat market in terms of what it did. And so at 660, and getting up to 680 today in December corn futures, if we're running a parallel universe back in 07, 08 with what we're dealing with right now, theoretically you're within 30, 40 cents of the highs in December corn with what we did in the summertime. And so this is where I'm going back to, is if this is 2007, 2008, this is probably a great place to start your 22 corn hedging. And that's what I did this week. In fact, today I started my first 10%. And this is really neat because this shows you exactly what Dees corn was doing back in 2008 by the day. And I've aligned it with the calendar with what we're doing in 22 right now. And it really, really similar price action. And we notice here at the end of March, after taking a dip, the end of March, really, we started to come back and base in April and May, and then go on up into June, July. That was mostly due to some weather scare and the wheat coming back, but you really didn't have much after that. So I looked at 2012 Dees corn against 2022, and it's very, very different. We were essentially going down in the corn right now instead of going higher like we are right now. So just some neat stuff to look at here in the next couple weeks that could push us into the next couple, 3 months.
Very, very true. Well, and on the other end as well, soybeans were our leader today, a couple days in a row here of a strong bean market, strong oil seed market. Palm oil's been up a couple days in a row. A lot of it tied to worries about what's going on in Russia, Ukraine with sun oil there, and et cetera. A shorter South America crop. There's a lot of things. Feels like there's a lot of support under this soybean market, and front month getting above $17 and holding above that here today. I think that was a key.
Yeah, it was. And I think this is where beans have really been showing their strength in the old crop. And it's really interesting. The opposite has been the case in the new crop, where the corn has actually been gaining on December against November. So you can kind of see the trades maybe trying to price in less corn acres and more bean acres when it comes to that acreage report. But in the old crop, they're probably looking at grain stocks. And I think that's why you saw that big difference between why is the May corn falling to the December, why are the May beans rallying and pulling November up and widening that spread greater. I think they're probably around 212, 240, somewhere around there as far as the May November spread. We're back to almost a $2.50 spread, if memory serves me right. And that, I think, goes back to the grain stocks and this tighter supply coming out of Brazil. And that's probably starting to show up more in the price action of what we're seeing in the port price, the export price of the Brazilian beans. But I think this is where it goes back to, I've been talking a lot this week to clients about why are we hedging, especially given what you and I are talking about, and this support underneath the veg oil market, this support under the bean meal market with China's bean meal prices starting to rally again, and they're rebuilding their hog herd still. And I think it just goes back to the crude oil market. The crude oil market and the vegetable oil market cannot be separated, and we just got to realize that, and we just got to start thinking about that. As soon as we look at what the vegetable oil market's doing to the soybeans, we need to immediately say, okay, what's crude oil doing to the vegetable oil markets? And the reason I bring that up is because the three largest commodity traders in the world got together on a Financial Times commodity outlook and conference this week. all three of them said between Russia not supplying 2 to 3 million barrels a day of crude oil and distillate diesel prices already tight in Europe and in the United States, we are probably going to have a systemic shortfall of diesel globally. And it was very interesting. They said that in the morning, and we saw the weekly Department of Energy diesel numbers coming in at the lowest since April of 2014. So we have a significant diesel problem and distillate problem that maybe we saw coming 2, 3 months ago, but it's on the doorstep now. And the reason I bring that up is because you talk about cratering demand. If we see this kind of a thing take hold, Jesse, yeah, we'll probably go sharply higher for a week or 2 or 3, but we're going to kill demand off. And it will be, I think, historical demand erosion. So be ready for that crude oil market to flip on you and go sharply lower. And that could mean the vegetable oil market does the same thing. So the volatility in the soybeans is getting higher and higher and higher. And it's not one of those things where you could see $3 up and 50 cents down. I think you could see $3 up and $3 down just because the nature of the crude oil market we're dealing with.
Well, Mike, I'd love to get your thoughts. I know on Sunday you shared your weekly newsletter to clients and subscribers, and you had a very interesting analysis in there: the new East versus the new West. And if you don't mind, can you talk about that a little bit? Explain a little bit of it, and just how your analysis and how this is all playing into our market trade right now.
This is something I've been working on for probably 3 or 4 or 6 months, Jesse, because of the ESG and the climate move and the European and United States, Wall Street and Brussels and London, the big money, the big investment banks like the Goldman Sachs, like the JP Morgan, they're literally not giving money in terms of big money anymore if you're not giving a carbon footprint or carbon reporting system in getting into that ESG is what they're calling it, type investment mindset. And so I started working on this because of the livestock industry and what that could mean to the cattle market, especially. But then all of a sudden, this Ukraine-Russia thing happened. And all of a sudden, we saw not just China abstain from the United Nations security vote when Russia invaded. We also saw India abstain. And I thought, here India is a democracy of all, one of the only democracies in Asia. And here they're only second to China in terms of energy consumption. And then I started putting 2 and 2 together. Is all of a sudden we had Russia, China, and India kind of forming a block based upon energy. And I think that you have to realize India imports 85% of its energy, of its fossil fuel energy to consume for the domestic marketplace. And it's the third biggest consumer of energy and crude oil and distillates behind China, which China is behind us. So when you start thinking about the size of these 3 countries, which are roughly 30% of the land mass of the world, you start thinking about their being developed countries and not being rich enough to take on high-priced fuels and take on this climate type mindset that London and Brussels and New York are pushing. It started to get me thinking that this is more of a practical issue, not necessarily Russia invading Ukraine. That was probably a side deal that Russia felt like they could get away with. But the fact that Russia and China are together formally, and India is on the sidelines saying, I'm not doing anything. And then all of a sudden you start seeing Saudi Arabia is not saying anything. All of a sudden it starts to add up. These fossil fuel consumers, these fossil fuel exporters, they're not liking this climate thing. And so that's what I'm developing. I did the first of 3 parts on a special series talking about this new East and new West. So what I'm trying to get at the very end is, what is this going to do to commodity trade? Is globalization as we knew it after World War II and as we build it up over the last 70, 80 years, is it essentially over at this point?
Very interesting stuff, and we'll definitely be looking for parts 2 and 3, and we'll be able to talk about those, I'm sure, as you publish those and get those out. I want to give us some time for livestock here today, Mike. This hog market looked like yesterday cash cutouts gave us the support we needed for futures. Futures back higher again today. Is that what you saw in the hog market?
Yeah, and I also saw on all 3 of the meats, feeders, fats, and hogs, on the Commitment to Traders report, the funds, the managed money, were not long at all. In fact, they're one of the lowest levels of net long and even net short in the feeder complex. So we're going into summer grilling season with funds that are not long at all, and we've got an Easter seasonal we're peaking at. These cutouts are coming on. Jesse, I got to think that this HPAI that we've been talking about is starting to really take hold. One of the key Des Moines, I think it was a Des Moines news channel, had a video on last night about over 6 million birds being called in Iowa at this stage, and about 5.5 million of those were at one commercial farm. I got to think that we're going to start to see a lot more buildup of pork demand and beef demand just because we don't have poultry. And this is really key because we're coming into a season where chicken breasts are grilled, and we're doing a lot with the grill season in the chicken side of the equation. So I would be very surprised if we didn't have a very strong ham seasonal and a very strong Easter seasonal. The other thing I've noticed too, when it comes to the cattle and the hogs working together more, is the ground beef prices. The 80% ground beef prices have fallen out of bed. That I think will help us not import as much from countries like Brazil, but it also lines us up really nicely for maybe a better price at the retail level, maybe better than last year and on the ground beef level when it comes to summer grilling. So I'm getting more enthusiastic, even with these high energy prices. I'm getting a little bit more enthusiastic because supplies of poultry and some of the other issues that are going on here that I'm talking about maybe will underpin us. So mid 140s for June cattle and upper 140s for August cattle. I think those are numbers that we could honestly take a look at and maybe shoot towards as far as our marketings.
Well, I haven't seen the cold storage report yet. I know that was due out today, and I know that's coming out here in just a little bit. So we'll see what that does to the market going into tomorrow, as well as weekly export sales. We also have a cattle on feed report coming on Friday, and I think that's going to have an impact, of course, on the livestock market if we get some surprise numbers.
Yeah, I think that's a really good point because the on-feed numbers are very tight for what we've been used to the last 3 or 4 months, and they're not looking at much more than 101% versus last year. And so if they came down to maybe 100%, they being the USDA, that would suggest to the trade that we are a lot more current than we thought we were, and that would maybe bring us a nice ability for the feeder cattle to not have to go down so hard if the corn rallies. I think that's one of those linkages we talked about earlier this year where the fat cattle and the corn can hook up together if you have tight supplies of both. So I think we may be on the verge of that. And I think you bring up the cold storage report, probably the most important cold storage report I can remember because of the HPAI and it being the Easter holiday buying pattern and also going into summer grilling. If we have tight pork supplies, tight poultry supplies, that should really help lift all three of them.
And we'll see what those numbers bring us here this afternoon and what they look like in tomorrow's trade action. Mike, great stuff as always. Any final thoughts for this Wednesday?
No, we continue to watch that dollar and the crude oil, and it's really working well. I would say to you, Jesse, I've got 5 big reasons why it's a good time to hedge and think about hedging, and that the bottom is not zero because of what's going on in Ukraine. So please take a look. Get a 3-month subscription for $150 on my website, globalcomresearch.com, and I'll be sure to send you that first special report section on the New East and the New West.
Globalcomresearch.com is where you can sign up and learn more. With that, Mike Zuzolo, appreciate the time on this Wednesday, sir. Thanks for joining us. We'll talk to you next week.
Thanks for having me, Jesse.
Mike Zuzolo, Global Commodity Analytics. That's going to do it for Market Talk on this Wednesday, March 23rd. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.